IVM.
Welcome to Think Fast, where I'm having an amazing hair day where my hair looks like it has had 5 birds nesting on it today. How are you today?
Yeah, Varun, you're giving very like Medusa vibes.
This is like, I'm like,
Seriously.
yeah.
Oh
Can I get
my
like a hair
God.
commercial? Is that me vying for like a hair commercial? Is that what's going to happen?
More like, please use Havels to make sure you don't get your ass electrocuted and then your hair looks like yours, Varun. That's the closest you're getting to any sponsorship opportunities. Congratulations.
That is
Congratulations.
Jam
But
it. And
what is happening, man? Slow weeks. We have nothing to talk about. We're
we've
like
had many
hunting
slow weeks,
the
no?
internet.
This is what happens when the market is down.
Yeah, but actually, to be fair, our users are thoroughly enjoying all of these, random little niches of the internet that we picked up and, brought to them.
Yeah.
Again, shout out to everyone who's, posting about us on LinkedIn and Twitter. We appreciate the love. It's great for our self-esteem, especially Varun's, who has absolutely no problem with all things confidence. But what happened this week, man?
This week, I think nothing happened. But if you look at it, Twitter, there's always something happening. Like I feel the drama behind Twitter is more exciting than what is happening on Twitter, which is something I never thought I would say. But
Yeah, same.
they actually sting operations happen. That
That
there's a
was
Twitter
wild,
employee
man.
on whom there was a. I'm like, I always wonder this, right? When sting operations happen, you're talking to someone you know,
Yeah.
and that's such a douche move, right? Like in general, like, and I don't know. I mean,
Yeah, and also for some weird reason, it's always an Indian. You know what I mean?
yeah.
Like I'm just like only you could have found a Siva Sukumar or whatever that poor chap's name was.
Siru Murugeshan.
Yeah, there you go. Yeah,
Poor
but
guy, man.
basically,
He's having a beer, and these guys like talking to him. I'm like,
yeah, and not a good look for Sivu because he went on this rant about how Twitter's full of commies,
commies. He
which
said
was
commies as is the word he used.
Oh my God, it was amazing. Not a good look for him. But Twitter has had it bad, man. I haven't seen, such a company which actually was heading in a totally like fine direction, getting pummeled by first Elon Musk's offer, first his minority investment, and then his, thingy of like wanting to buy all of Twitter. And now apparently that deal is like going nowhere because Musk is finding all sorts of random excuses to not take the deal forward. So I feel really bad for the guys over there.
Yeah, and also there's this, and in more bad news, the former Twitter head Mahesh Maheshwari, if I remember his name right,
Yeah.
and I forget the other co-founder. They started this thing called Metaversity, and they raised like a ton of 33 million, and raised funds at 33 million valuation. And now they're both fighting before it even launches. So I don't know what's going on. It's like this world is
It's
where
in the air.
everything in business is about fights, and it's like we are not talking about business anymore. We are reporting on Saas Bahu serials that Ekta Kapoor makes. That is what we're doing right now.
Speaking of Saas Bahu, the ultimate Saas Bahu, breakup has happened. Ankiti
Yes.
Bose has apparently been fired from Zilingo. I really don't want to joke about founders getting fired because it, sucks. But
Terrible.
I don't know, man. Like, it's just such a... I don't know. It's just, like this really, frustrated me. And also, I mean, to be fair, there's so much context that hasn't been made public, right? So, I mean, no way am
So
I
true.
defending what Ankiti Bose did or didn't do. But the problem is so much of this becomes like a perception battle, and in between, obviously, I mean, like Ashneer to publicly was volatile for the lack of a better word, right? But I don't know. God knows what happened over there, but not a good look, obviously, for the founders and definitely not a good look for the investors. I think the biggest loser in this case is Sequoia because in the past, just about 6 months, they've now fired 2 founders of companies on the boards of which they were. And obviously, God knows what's happening with Trell, but, they seem to be still under all of those like governance issues and this, that, and the other, but definitely not boding well with Sequoia at all.
I think also if you look at it, it's even across the border, like look at what happened with Alibaba and Paytm Mall as well. The fact that Alibaba pulled out now at like a fraction of what the valuation was. And obviously this, I think you and I were talking about this even before we hit record, is the fact that this is more Jack Ma pulling out. But also if you look at this, what Paytm was trying to be versus what they're having to come down to is literally a trend, which is the entire market, right? Saying, okay, focus on like what you're actually doing. Don't try to do too many things. Just work towards profitability. That seems to be
Yeah,
the
but
underlying message everywhere.
yeah, but like the one thing that I'll add over here is not to say that what happened to Paytm is a M&A, but generally,
Mm.
like if you look at the landscape of, like buying and selling of assets, I think taking everything at like prima facie value of, oh, it only got sold for 42
Yeah.
crores. There's so much that happens behind the scenes. You have no idea what's going on, right? So you have no idea if this decision was partly triggered by Jack Ma wanting to get his money out of India. Maybe it was triggered by Paytm not wanting more, Chinese investors on their cap table because, obviously all these companies are coming under severe scrutiny, especially
Mm.
since the debacle that people have seen happen on the stock market. So I think the thing that I'll sort of say over here is like, we shouldn't believe everything that we read or just evaluate things based on numbers because there's so much that happens behind the scenes that doesn't
Yeah.
get reported and a lot of context gets lost over there. Layoffs are continuing. Netflix
Yeah.
has laid off about 150 folks. Vedantu's laid off 424 folks, blaming scarce capital, though apparently the CEO was called out on LinkedIn because they've been hosting fancy offsites and spending all kinds of money on this, that, and the other, while having all of this happen parallelly as well. So, tough news there. Ola's delayed their IPO. God, where is like the happy news over here? Varun looks like shit. Giri Bose is getting fired.
Wow Skin Science raised some money. Somebody's raised money. Like fair enough, let's do that. Like Wow Skin Science, obviously, Wow I think was one of the early players, right? The early movers in this whole
Yeah.
D2C
And
bandwagon.
interesting
And
positioning also.
exactly, and they've raised capital because also again solid business. They've been run well. They've built it in a very streamlined traditional business manner. D2C is a strong part
Yeah.
of it, but I don't think at any point was it fluffy in the. I
Yeah.
can't believe I said fluffy about businesses, but fluffy I feels like the right word to use. They were not
Uh-huh.
fluffy in the traditional sense of the word. But what are we talking about this week? What are we talking about this week?
We are talking about, so my first topic is going to be community led businesses, where first and foremost, Varun and I will answer what the hell is community even and what is
Yeah.
community marketing and why does everyone keep saying that they're building a community, but there's no, like substantive, whatever, like proof of this community being built. So we'll talk about that in the context of BlissClub, which is an athleisure brand, their fundraise. We'll also talk about how big is India's customer TAM for any
Mm.
type of brand, right? Consumer technology companies or even consumer brands. This obviously has been kicked off thanks to the multiple tweets being done by everyone from Paras Chopra to Nitin Kamath and others across the board. And finally, D2C unexplored now that everything is vegan, handmade, artisanal, and clean. What are the opportunities that are really left to explore in direct to consumer? And Varun and I will brainstorm and give you guys a couple of ideas to run through. What about you, bro?
Speaking of brainstorm, I'm going to start off talking about OnlyFans. Big market opportunity there. No, not really. But I'm just like, I think it's important to look at different business models and what they're doing. So
Varun wants to talk
OnlyFans is,
about his favorite product, guys. Pervy uncle
yes,
is back today.
OnlyFans,
He's
my
not
favorite product.
fondling Ken dolls. God knows what he's fondling
But
under
I
the
have no
desk.
Ken dolls
But
today. I have a little bird with me though. I have
yes.
like a little bird here.
Oh God,
Hi,
stop
bird.
touching the bird.
And then we're going to talk about Smytten having raised 100 crore in funding led by Fireside Ventures. Going to get into the whole subscription box model, whereas they're no longer a subscription box in that sense, but it's a model to kind of look at and understand, is that even a thing anymore? Is that going to be a thing at some point of time? And also kind of dive into multiplexes and how like small towns are driving growth there, what's going to happen to them
Yeah.
in larger cities, and look at that entire theater market per se. So that's what we're getting into, plus me and the bird here. So till we'll take a break and I'll say hi to the bird again a little bit and then we'll be right back to Think Fast.
Hey, it's been another great week on the IVM Podcasts Network. On The Habit Coach, Ashton delves into the power of meditation with spiritual guide Swami Purna Chaitanya. On Misconduct, Raghavi and Nisha tell us the story of Neha Verma, who killed 3 women in cold blood. On Cyrus Says Cock and Bull, Cyrus, Puneet, Utsav and Antariksh talk about the Tamil Nadu woman who disguised herself as a man for 36 years to avoid sexual harassment. On The Longest Constitution, Priya takes a look at the contest between private, commercial and constitutional interests. And on Big Talk About Tiny Humans, Devi Shobha and Meghna tell us how we can raise awareness about child sexual abuse. We've got some exciting news for you. IVM Podcasts has just launched its merch and our first line is out now. Head to the IVM Podcasts website and click on the shop tab to check out our first collection of t-shirts. Do follow us on social media. We are IVM Podcasts on Twitter, Facebook, Instagram and LinkedIn. And remember, if you're enjoying this show or any of our other shows for that matter, please do tell a friend. Don't forget to rate us on any platforms you're listening on. You can also check us out on YouTube. We are also doing a small listener survey to better understand how you respond to our shows and advertising on the network. We would really appreciate if you could spare a few minutes to fill it. It helps us build better shows for you. And finally, we would like to thank our sponsors this week, SBI Life Insurance and Jupiter, a digital banking app.
Welcome back to Think Fast. Me and the bird have had a nice chit chat, and we're back to talk about Suchita's first topic. I think this is going to be one of those episodes that I'm just going to go like really random tangents, and Suchita's going to be like, get back to the topic.
Every episode, guys, which sounds
Every
like every episode. No, but now that Varun is done, quote unquote, chit-chatting with the inanimate object
Bird.
on his desk, which is a bird that has a very pointy beak, let's get into the first topic for today. Our listeners are going to think we're like a bunch of like old pervy, like dudes. But in any case, let's kick off with the first topic, which is community-led businesses and brands, right? This story really came off the back of, by the way, congratulations to the BlissClub team. They raised a $18 million Series A as a follow-up to their last round, which was raised about last year. And, in a lot of the media coverage that came up around BlissClub, folks were describing BlissClub as this community-led brand, right? Yeah. And you've seen terms like that being used for a lot of other companies in the past, whether it's, OnePlus, for example, says communities are differentiator. Even Nothing, the headphones company, says, communities are differentiate. And then, of course, you've got the likes of, Fitter, Unacademy, and the likes who, with respect to whom this word keeps getting used. So before we get into BlissClub and if and how and when they've used community, Vidi, if I had to ask you, how would you describe, like, what the hell is community marketing? What is a community-led brand even?
I mean, at the base level, it's basically saying you're taking the core consumer, you're building a way for them to communicate with each other and with you, and you build your product basis what their needs are and not what your perceived thought. Okay, this may be something a consumer might want, but you're actually involving them in the process of really building out the products and every single aspect of that. In that sense, I mean, Glossier is a great example of that. Right? I mean, they used to have, if I remember, at 1,000 member Slack channel where they would just keep jamming with them, and obviously that 1,000 member grew much larger, and then building the products basis what people were asking for. I mean, at the base level for a consumer brand, that's what a community-led approach would be. But the problem is, and I look at a lot of these brands, while they say community, it's tougher to find where that community is. It seems like you're coming to another D2C brand or another brand, and nothing wrong with that. But how do you define that community is the question I've had for a while now.
Yeah. In fact, there's this tweet by Greg Isenberg, who's fairly popular on Twitter for most things startup and tech related. But he basically posted this tweet about how there's a big difference in between an audience and a community. And people, when describing their brand, end up sort of, using the both interchangeably, but it's very, very, very different. And also, there's a big difference in between the community you have and your power users. So companies can have a, significant sort of base of power users, but their community may be a fraction of that, or maybe much bigger than that. But I don't know. I think what you've highlighted is super interesting, because as usual, we all sort of fall into that trap of using exotic terms and exotic words to define things that are basically come down to one simple term, right? Which is organic growth, and that is like the truest definition of community-led marketing, right? Community-led marketing, like many other different types of marketing, its biggest exemplification or the metric to measure against it is, what percentage of my traffic is organic and what percentage of my traffic is actually, or traffic or orders or whatever else, how much of it is being driven by word of mouth, which is another way of, describing organic traffic or organic customers versus, actually having to pay top dollar to acquire consumers. And, a lot of people have sort of like written these articles about the next wave of startups will be community-led and this, that, and the other. But like the truth really is that, every marketer today is on the hunt for finding places and finding channels and finding ways in which they can acquire consumers without, having an explosion of customer acquisition costs. The OG of community really was like Instagram, right? Instagram and even Facebook groups, for that matter, was a way
supposedly
to
still are, and I don't know how strong that is. If you look at
Yeah, I
even
think
BlissClub, for instance, has an 8,000 member Facebook
Facebook group.
community. And that's what, so if you go into this, I went on their site and I was like, okay, where is this community? And if you go down towards the lower part after you go through the shopping section, there is the community. It's basically, they have to let you in. There are about 8,000 members is what it shows as a private group. And it's basically, I mean, if you're just reading through what they've written here, it's a women-only community for fitness, health, and motivation, safe space to ask questions, share opinions. They also organize free fitness sessions, challenges, and stuff like that. So I'm just going to prop a question here. You might have this 8,000 member community, but how do you know these 8,000 people are buying your product? I think that's been the question, right? How does community really translate to transactions?
I think that's a really good question, and my sort of answer to that is no, because the whole metric associated with building community should not be how many orders you're getting from it, but it should be, for example, like community should lead to organic mentions for your brand online, right? Or it should lead to, so for example, like the metric that I would measure for how strong or weak BlissClub's quote unquote community is, how many tags do they get in a day, in a week, in a month online organically without, obviously all the influencer collabs that they end up doing. Because your community members to a significant extent are your evangelists, right? They're the ones who are really sort of like propagating what your brand stands for, even if they may not be like the biggest consumers or the biggest, users of their brand. So for example, if I think of like a community-led product that I think has done a really, really good job, I would actually call to Product Hunt, because I think like literally their product is built on community, right? The community is the one that recommends, up and coming apps that are launching. The community is the one that also votes, upvotes, downvotes, this, that, and the other. Another great example, you mentioned Glossier. I remember I'd actually done this presentation a while ago on the best community-led brands, and Glossier, for example, their community is not you and me who may be a part of their Slack channel or whatever else. Their community is actually their store people, their store salespeople. So Glossier has this major focus on making sure that the sales staff, that is their community, and they invest very deeply in that, right? Even Sephora does the same, because they know that the salesperson in the store is actually the single biggest ambassador for, Sephora, Glossier, or whatever else. With Nike, for example, they had, the Nike Runners Club, which was a way for them to make what Nike stands for more tangible. And the best companies that I've seen over here is they're the ones who really take their community to create, content assets, right? And when I was going through like BlissClub's page, I didn't find too much of that. Like I didn't find too much of how they've taken their community and used their community as a vehicle for, content creation. But maybe they've got other things happening in the background, which, you and I haven't seen.
And just like one last point on this one, which I have, is that even if you look at a brand like a Netflix, and I'm saying this is an experience of what we've worked with them partly on this at Glitch, and I know they have multiple partners who work with them on this, is they really build themselves as this community of fans and of fans of all forms of content, which obviously, like you said, it spreads out what the brand is, but doesn't necessarily have to translate into transaction. I think that's the core thing to take out of this, is that we can't assume a community will buy everything that you make out there, but they will consume your content, they'll interact with you, and they'll spread the word.
Exactly. Absolutely. On to the next.
Speaking of spreading the word, let's talk about OnlyFans. Yeah.
Oh my God.
So, okay, all honesty, and this is full truth, mother swear, I have never been on OnlyFans. Right? I have never...
Guys,
I said mother swear. I have literally not ever opened
your
it,
fingers are crossed, your toenails are crossed 2000%.
My hands are here. See, if you guys watching this on YouTube, my hands are like this. I have never been
so for
on
a minute,
OnlyFans.
if we had to believe you have never been on to OnlyFans, wink, wink. We see you like winking on the side. Yeah. But next, what's next?
So basically, it became a way for creators to make money initially, where they were saying, okay, there's certain content I put on social, which is for free. If you want access to more content, you got to kind of pay a subscription. This is initially, you would have fitness creators saying, okay, you get deeper fitness content, but the fitness part was more visual than actually making someone do any fitness activities. As that spread, there's a line where it became adult entertainment. And I feel in many ways, if you look at it, this also kind of pushed, I think for many companies, you kind of scale that way, but you don't want to become a porn hub. So because you can't raise money in that sense. So I feel at some point OnlyFans took that call to say, okay, we're going to ban explicit content and we're going to look at this in a different way. First thoughts, what do you think of the OnlyFans model?
So, the OnlyFans model is very similar to Patreon
No.
right? But the biggest difference in between OnlyFans and Patreon is OnlyFans is actually a demand generator versus
No.
Patreon, where you have to, like, if I'm a creator and if I'm using Patreon for me is a tool. It's not the end in itself, right? And I think that's why OnlyFans has struck gold, so to speak. And this is what my assumption is. They'd see a lot of direct traffic. They'd see a lot of, folks opening, like, OnlyFans as a brand is bigger than, any single creator unto themselves, right? I think
No.
the other really interesting thing about OnlyFans is, similar to like Instagram, YouTube, they actually have proprietary creators associated with OnlyFans, which I think was Clubhouse's biggest Achilles heel. So Clubhouse, for example, had like tech bros, quote unquote, using Clubhouse, but Clubhouse never really created their own creators versus, for example, like how YouTube has their own creators, right? Or like
Yeah.
Netflix will have their own like OTT stars or whatever. So I think the success of OnlyFans keeping, all like, porn and sex related innuendos aside has been these two things, which is they've created a strong base of direct traffic for themselves, which I
Yeah.
think has benefited their creators. And I think the second big thing is they've got creators who you'll only find on OnlyFans. And also the type of content that's created is unique, right? But basically what I was saying was, like, I think OnlyFans is, big win has been, sure, some people may like scoff or roll their eyes at the kind of content coming out of OnlyFans, but I actually think content like this should be embraced. Like, and it's kind of like, I don't know how to explain it to you, but it's kind of like, weed, right? Like, the second you bring it into the mainstream, you know what I mean? Like the
Yeah.
crassness associated with it, that ends up going away. So I think somewhere there has to be like normalization of parts of OnlyFans. But sorry, I digress because we lost connectivity there for a second. But those would be my, early thoughts on OF.
When the pandemic hit, OnlyFans grew from 8 million users to 85 million users. Right.
Wow.
That is the growth they saw, because the entire adult entertainment industry said, okay, where can we go? We go here. 1 million creators are making original content, right? Revenues went up 553%. They made
Wow.
$2.4 billion in just that first year. So if you look at it just like from a business lens, that's where it's there. And a lot of OnlyFans creators actually turn around and say something. They say that we are not putting sexual content here. We're putting, it's almost there. I've weirdly realized that some of these creators have started to tease this online, where they will put up content which is it's almost like a couple is just starting to kiss. It's there on Instagram, and then it has a link on top saying, you want to go deeper and kind of see that, you can go to OnlyFans, right? Stuff like that is really happening, and they're using Instagram as almost like a promo for where you can see the large part of it. You have streamers. Some of the most popular streamers are actually adult streamers, and they've started to say, okay, can you project this out, and you want to see an unedited stream or something like that, then you can kind of see it here. But there is a line where I think the adult industry has said that, okay, either you're pushing us to do porn on places like YouPorn or Pornhub, but what we can actually do is find a line to do this without having it to be that far. And OnlyFans gives us this. But the problem, I think, for OnlyFans is they're seeking a fundraising. And for, in that sense, for them to kind of get that fundraising, if they go more adult, they can't. But that's getting them the most amount of revenue. Which is why when they showcase a creator, they showcase as many creators who are non-adult entertainment ones. So it's this weird balance that's required. I remember a while back, and I don't know if any of those apps survived or it's still around, because as somebody, I remember I was at office and we were looking around on what streaming apps are kind of happening, like this is 2019, 2018. And I came across this app, which was very like, Indian tier 2, tier 3 consumer using it, or rather the Bharat consumer really using it, which is basically you have people on a stream. Largely it would be women who, the longer they kept consumers on, the more money they would end up making. And they were keeping it on with like almost going to the line of saying, okay, thoda aur mujhse baat kar lo na, and stuff like that. And it felt like this. And at that time we were all like, once again, we know where this is kind of going. So this is going to get banned at some point of time. And I don't know if it got banned, and I can't recall the name of the app, because there were a set of these apps that had come up around that 2018, 2019 time.
Yeah. In fact, there was this audio app that I checked out recently. Remember I told you about this? I think they were called Friends or something, where again, it's like audio only. So, and it's a mediated conversation, and it's a way to make friends. Like, and I don't even want to know what kind of conversations end up, coming up away. But quick FYI, by the way, OnlyFans' new CEO is Indian. Mumbai born,
What?
Amrapali Gan. Yeah, her parents must be very proud of her decision.
Whenever somebody wants to make a business more robust and standard, get a desi to come and run it is what seems to happen everywhere. So this might be the.
Yeah, yeah. This might be the little exit for
I
OnlyFans.
think we should.
But
We should actually throw a question to consumers saying, you guys have insights on this point. You should tweet it to us,
yeah,
and we can maybe kind of engage on this further on Twitter, where we seem to have a lot of people who listen to us
yes,
putting stuff up.
friends.
But
What do you think
speaking of
about
Twitter,
OnlyFans, ladies and gents? Yeah, speaking of what about Twitter? We need to
uh,
switch conversations.
switch to our next
Yes.
story. Yes, I was
Thanks for
giving
the
you
nod,
a
Varun. Thanks
leash
for
to
the
move to
nod.
the next one.
Thank you. So, guys, the next story is basically about, obviously, if you guys have opened Twitter specifically over the past couple of days, you would have seen everyone from Kunal Shah to Deepak Abbott, Nitin Kamath, Paras Chopra talk a lot about how big is India's market, right? And again, a lot of these conversations have come at the back of, this obsession around unicorns, and a lot of these unicorns not necessarily being able to justify their valuations because, at the end of the day, a business's valuation should be a reflection of the market that they're going after. And the fundamental question over here is how big really is the consumer market in India? So, for example, like Nitin Kamath posted this thing on LinkedIn and on Twitter where he basically, alluded to the market being maximum 15 crores. And he actually sort of, gave the math basis, what he's seeing happening on consumption of demat accounts. And then obviously this single post, led to a bunch of other people jumping on the bandwagon and reiterating this message. So, Varun, given that you work with a quote unquote, real business where the agency business, right, where valuations can't be lofty, where revenue is king. And again, you've come from an industry that is, and you've also built things ground up, right? You guys didn't raise like crazy amounts of money to get to where you
Not
are. When you reflect on the Indian startup ecosystem valuations, what is your take as a insider outsider? You know what I mean? Like how do you
yeah.
mull on this space?
So I've always found it very confusing to build a business without an eye on profitability because at some point the reason you build a business is to make a profit, right? And I feel that at some point I understand why you need a certain amount of funding to build at least some parts. So like in a tech business, you need some amount of money to actually build the product. That's understandable, right? But at some point it's become this scenario of saying, let me fill up as much into my valuation. And at some point you lose the real focus of a business, which is to actually not just build a product or a service, but to build profit. Because at the end of the day, that's why you're doing it. I mean, and it's not, and in some cases, it's not like the profit has to be a massive amount of money. Are you being able to even manage your costs? Are you being able to, and that's what it was for us, right? I mean, we think all in all raised 20 lakhs. At some point when we had a first angel check come in was about 20 lakhs, right? That's all we raised. And for us, it was like really work on say, okay, what can we do to make sure we're bringing in money? So we'd have one revenue stream half the time to kind of bring in money to run day to day and then keep pushing towards the kind of work you wanted to do. And eventually the work you wanted to do became the largest part of what we did. And I think that's how a large amount of businesses are built outside the valuation game of things. The problem with going towards this is it is needed for some, it is not needed for all. I think some of the smarter, even like D2C founders I've spoken to, right? They've all said that you need to build this in a way where it's profitability from day one. Like I remember talking to Aman from Boat and he said, day zero, we wanted to make sure we were making profits. And he's been very frugal with how he spends his money and that's how they've been able to scale. And the good part is you also don't give up equity when you do that. You're not giving up as much equity. If you build it slowly, you don't have to build it. I think Nitin Kamath as well didn't raise as much, right? Or he has not raised at all.
Fully bootstrapped, not raised a single penny.
I think that's the way to look at it. And I'm hoping that that's where people will go. But I'm not so sure they will because as long as there is a way for you to raise funds, the feeling, okay, maybe I should just like kind of get some in will always be there.
Yeah. And, like taking on from this, so obviously raising money is one thing. And I don't think the problem is with raising money, right? I think the problem is with how are you justifying multiples at which that money is being raised? Like Deepak Abbott, who has a blog called Growth Bug, he actually did this whole sort of analysis on revenue multiples at which companies have raised money. There are some companies that have raised money at multiples of northward of 900x. Bro, how does the math around that even work? And even if for 1 second you had to assume that, like a company will catch up over time, at the end of the day, you need to look at like, it goes back to the fundamental question of how many users are there even in India who can afford to buy this product? And let's get into numbers, right? Adding to what Nitin Kamath said, Deepak Abbott, who runs this company called India Gold, he basically added another data point saying almost 25 million power users of UPI end up doing 50% of UPI transactions. These are the most addressable base for any B2C startup. So again, you have a population of 1.3, 1.4 billion, whatever it is at right now. Out of this base, it's literally only 25 million people who are, digitally adept, digitally sound, and are driving the kind of transactions, that we're seeing coming in through like UPI pipes, right? Kunal Shah added to that, saying if you remove the top 3 crore customers for calculating our per capita income, it would drop from 1900 to less than 600. And another data point that he speaks about a lot is 95% of urban women don't have their own financial income, which is like abysmal. And if you look at growth stories of China's growth story actually came from women participating in the labor force. It didn't come from, women sort of sitting on the sidelines. And then Paras Chopra also added to it, saying the average income of 90% of Indians is 12,000 per month. And that for the bottom 50%, which is 600 million people, is 4,500 rupees per month. And now understanding all of this data is so important, because if you look at, for instance, like, I'd shared this article on Titan. Titan's absolute consumers in India is, and this is, sorry for the French, it's Titan, right? Like, biggest consumer brand that's come out of, that's been, built in India. Titan's customer base is 20 million, right? Titan, like going after everyone from tier 2 to tier 3 to tier 1 alpha. If you look at, for example, Nykaa, when they had, posted their prospectus or their filings for their IPO, if I'm not mistaken, I think their monthly transactions or transacting users, those the different numbers, but it was closer to about 1.5 million. I'm just saying, like, the actual number of people who have the capacity or the discretionary spends to make purchases in India is so small. And hence, like, people sort of, and I've seen so many founders making absurd pitches of, our TAM is 100 million, or like our TAM is 300 million. And you're just like, dude, that's great. But where are these 300 million people spending their money? Right. And if they're spending their money on, not even kapda makan, but basically roti, how will you ever make enough money to justify those kind of valuations that you're commanding? So, I mean, I can go on and on about this, and we spoke about this very briefly in our last episode as well. But I think somewhere, the ecosystem needs to recognize that the number of consumers in India who can actually spend on consumption is very limited. And everything from valuations to the way markets are analyzed, all of that should reflect this versus what's, happening right now.
Yeah, and just like a final thought on this, right? And at some point, I think there's a Money Control interview as well as Nitin Kamath did, and he said that he would rather look at making 1,000 rupees from a consumer over 5 years than try to get those 1,000 rupees over 3 months or 6 months, if I remember right. I think that's the way to look at it. I think the need to grow that fast is why you're saying your TAM is that large. But what your actual TAM might be, even if it's smaller, as long as your roadmap is stronger over the long term, it will make more sense. But I guess sense only comes when markets in a scenario like this, I'm hoping, but hopefully it stays.
And just last small thing that I want to add over here is, I think the startup ecosystem, if it wants to survive, we need more $100 million companies than unicorns. Because the only way to actually create jobs in India is to have more $100 million companies than, than putting all of your eggs in the top 100 unicorns, because that's not the need of the hour. You don't need more highly valued businesses. You need more businesses creating high value. Good line, Such. Good line.
Wow, what's a line? What's a line? Well done. Quote karo. Stamp banao, t-shirt banao, merch becho iska, merch.
Oh my God. Yes, done. Aapki tarah.
So on this line, on this punchline, should we take a break? We should take a break. We have a bunch more stories to go, but I think it's time to take a break and be right back with Think Fast. Let me think. Bird, what do you think about this lovely statement that Suchita has made? Bird is back.
Guys, please catch Varun on OnlyFans making out with the bird.
Bird is such a cute bird. Okay.
Oh my God.
If you're a cricket fan, check out Edges and Sledges, India's favorite cricket podcast.
The podcast focuses on Indian cricket,
the IPL, and has a ton of banter both on and off the field.
We talk about the week's biggest cricket stories with current and ex-international cricketers, coaches, or sometimes just between us.
And it's hosted by me, DJ.
Me, Varun.
And me, Ashwin.
New episodes release every week.
You can catch us on the IVM Podcast's website, app,
or wherever you get your podcasts from.
Check out the Edges and Sledges Cricket Podcast.
Welcome back to Think Fast. Me and the bird are back here with Suchita, and it's my story time. Bird, you can sit down now. Bird is sitting. I think I'm going to take this joke too far by the end of this episode, but nevertheless, it is not even a joke. Speaking of things that have been flying high, Smytten just raised 100 crores in funding led by Fireside Ventures. Smytten, if for those who don't know, started off as a subscription service and eventually moved to a product sampling and engagement platform for D2C brands. And, I just like first thoughts. Have you used Smytten? I haven't used the product.
So I tested it out once when we guys were launching, our sort of like variant of sampling. So I tested it out and I actually spoke with a couple of my colleagues who use Smytten. And from the sounds of it, it seemed like a good way to, try brands or actually one interesting data point that came out was it's a good way to get smaller sizes of brands that people find aspirational but may not be able to afford a 50 ml or 100 ml off, right? Or whatever, like full pack size off. So those are the two insights that came out where it's a good way to, try a brand that you may have seen a lot on Instagram, but not sure if you want to, go all in, or just a more affordable way to buy a brand that may be, out of your general reach.
Also, the interesting point here is when you look at sampling, and sometime back, I remember that I was ordering something off Dunzo and it kept saying, Dunzo kept sending me samples of different products. Sometimes when I asked for it, and oftentimes when I didn't even ask for it.
Yeah.
And this has always been a case, right? I mean, for a D2C brand, obviously discovery is one of the key things, considering the number of them which are out there. And let's say if a consumer finds one, that could be interesting. I've seen this also happen in the alco-bev space. There are a few cocktail-related and, alco-bev-related subscription boxes where sometimes it just comes as a sample box. Sometimes they're saying, we'll just send you a few things. Way back in the day, there used to be something called the Wine Society of India, where if you had a subscription, every month they would send you, I think, 10 to 12 bottles of wine, if I remember right, or even less, the 6 bottles of wine basis what you were paying for. And that used to be a thing to kind of spread the whole wine piece there. So it's always been around, but while sampling is one thing, this also could become an opportunity for someone to say that, okay, I'm building almost ecosystem of sampling other people's products, build my own and kind of send that out as well. Do you see that as the natural extension, or it's just this should always just end up being sampling only?
So, one thing that's been proven over and over again, so Smytten obviously is inspired by a lot of subscription boxes that exist all over the world. One of the more well-known ones being Birchbox, which was started in the US, in like 2008, 2009. But basically, the business has been around for a while. I was just Googling Birchbox to see what they've been up to, and they actually just got bought by a healthcare startup for a little over 45 million, which frankly isn't all that. Yeah, which frankly isn't all that much. Again, why companies sell at what price is a whole other topic. But basically, that happened. And a lot of where this healthcare startup wants to take Birchbox is sampling of, a more health-related products, whether it's skincare, supplements, birth control, pregnancy tests and things like that, and using that to collect data and collect, information. And in fact, one thing that's been proven over and over again is just because someone has bought a sample from Birchbox doesn't mean that they will actually buy the main full product from Birchbox's store. So if you, for example, if you quickly open Birchbox, you'll see that, Birchbox also has the capacity for you to buy the full size of the product that you may have sampled off of Birchbox. And, one sort of big correlation that didn't end up playing out was just because I bought a sample from you doesn't mean I'm also going to buy the full brand from you, whenever it is that I choose to buy the brand. Yeah. And this isn't just true for Birchbox, it's true for pretty much anyone who has dabbled in the general space of trials and sampling, where they end up being, very good like introductory platforms. But their ability to, consistently drive revenue for the brand that they may be sampling to consumers ends up being far and few in between. And the trajectory that a lot of these companies end up, taking on is they end up becoming B2B businesses at some level. So I don't know if you remember this company called Foursquare. So Foursquare was like the OG local discovery, right? Foursquare has
It was
become a
almost
B2B
competing
business.
with your social networks at that one point of time, trying to be a Facebook.
Exactly. Foursquare has become a data business. So today their business is basically B2B, where they provide localized data to, maybe like Nike or whatever, and help them, figure out where they should be launching their
I think
next.
they were giving data to Instagram. I don't know if they still do, but there was a point of time where all Instagram location data was driven by Foursquare at the back end.
Perhaps, yeah. But basically, like, I think what ends up happening with a lot of these companies is, on the consumer side, how much they're able to scale ends up being a bit of a question mark, because, if a user is only coming back to you for, I don't know what Smytten's numbers are, like, I don't know what their average order value is, but, given like single products are for like $50, $40, $30, if you put a box together, if I'm not mistaken, I think it's at $299, $399-ish pricing. I don't know how you, unless the products that you're getting are fully for free, I don't know how the math on that adds up, right? Because we've seen this happen time and time and again. If you're selling something for $399, your delivery cost is 99 to 150 rupees, depending on where the delivery is being made. And if you're having to pay for the samples, how much money you yourself are netting out is a question mark. So is sampling a powerful channel for beauty brands? Yes. And I think that's what it seems is the primary use case of Smytten. I know they had FMCG, I know they had food products on Smytten. I don't know how well or not well, it's grown. But I don't know, like, I think the long game over here is either you get bought by a Marico or a HUL.
Yeah.
And if you want to get bought by a Marico or an HUL, you want to make sure that your valuations are not stupidly high, because Marico and HUL traditionally don't pay a shit ton of money, to acquire companies. Or, your business model over time becomes like B2C plus B2B. And those two revenue streams end up building a fairly robust business. So that would be my, 2 cents on like Smytten and where it could perhaps possibly go.
And if you look at it, 40% of their revenue comes from B2C and 20 to 25% from brand commissions, and the rest is sampling analysis and data sharing, right? So the data part of this also could be interesting. So if you look at it, it's not like the B2C part is the largest part. Obviously it is the largest in terms of percentages, but if you add them all up, it's not the majority in that sense of the word. So what do you think of subscriptions though? If I have to look at this, if I was someone trying to build around subscriptions, is that a more, obviously from a unit economics, you're going to make more money per transaction, but I don't think people in India subscribe as much to products as they would to streaming, etc.
No, and they historically never have. It goes back to the question that we had earlier, right? If you are trying to tap into consumers who already have very limited pool of, discretionary spends, and if your goal is to juice as many of, that discretionary spend as possible, how often would you see people wanting to buy samples? And I think the other problem with sampling led subscription is, like you said, a lot of samples are available for free. Like if you go into Godrej, nature, not Godrej anymore, but like a Nature's Basket or a food hall, Wingreens will have their guys offline helping you sample their products, right? So I think the problem with subscription, especially when you're selling samples, is, why would I want to sample something? Why would I want to pay to sample something that, chances are if I just took a Vistara flight, I'd get for free, on that flight? Or for example, if I bought something off of Nykaa over a certain amount of money, they end up sending you stuff for free, right? So if you spend more than like $2,000, $3,000, they usually end up, bucketing samples, into the overall mix. So I think where subscription works is if you are playing in a category where a consumer is actually promiscuous. So for example, like I think wine subscription makes sense because wine is a space that consumers don't understand enough of, and hence you've seen the success of companies like Wink in the US, right? So I don't understand enough of wine. A Pinot Grigio is a Pinot Grigio, no matter like who you're buying it from after a point in time. And that subscription gives you the capability of like buying stuff at a 20% off than what you'd have to pay. So basically, at some level, subscriptions become a way to get a discount, not necessarily, you know what I mean? And that's what a customer's perception is. So I don't think the proposition of like try something new works beyond a point. I think after a point, it just needs to be like, dude, if you subscribe, you'll save. Which is how New York Times sells subscription, like any media company sells subscription,
That's
right? You buy this in advance, you'll save. So I think somewhere the positioning needs to become more saving than anything else. But should we switch? Wow, Varun, we're having such a long episode. Jeez, Louis.
Speaking of buying,
oh my God.
Our favorite topic, D2C. We talk about, I think we speak about D2C more than any other segment on this show. I feel.
But it's such a fun segment to talk about, man.
Yes,
so much happening in consumer brands. Add to cart. So guys, the last topic of mine for today, and I've been very talkative today thanks to the amazing coffee which is in my cup. But the last topic for today is I stumbled upon this really cool article on this super fun website that everyone should check out called thinktesting.com. And the article was basically about opportunities that are left in direct to consumer, or let's just loosely call it consumer brands. And really where the article came from is now every Tom, Dick and Harry has a beauty company. Everyone is launching some, silly brand or the other. And also everyone's proposition has become the same, right? Everything is handmade, artisanal, vegan, clean, blah, blah, bullshit. So the real question is, what are the opportunities left now that everything has become a commodity and, things that used to be not mainstream have gone mainstream. So let me ask you this, Varun, if you had to like launch a D2C startup, right? Or just a consumer brand, what are the topics that you, or like the categories that you launch stuff in?
Let's launch the unhealthy category of products is what I would say.
Must. Lean into
yes, I think that's what's missing. We don't have unhealthy products anymore. Everything is healthy. But I mean, on a serious note, I feel at some point what you're saying is right. I think the R&D side of things you've covered every single base people might want. All the ingredients have been, everything is available to everyone. If you look at how a lot of these are even manufactured, you can kind of just go into a white label manufacturer, work with them. It's almost a system you can plug and play with. What's left is building brands, building community, and if you can focus more on that, is that what differentiates you from other brands? That's the only thing you will have. There's a pro and a con. I think the con there is the fact that then you are solely relying on connecting with the consumer on what you are like, what you stand for, to really have them connect with you, which is not a super strong bond in many cases because customers are flaky. But on the pro as well, it gives you the opportunity to kind of evolve and say, today I'm working on this product side, tomorrow it might be something else. I can evolve basis where I see opportunity. But it is tricky though. It's tricky to see where people can launch, especially, from an Indian market perspective, also considering the consumer base is so small and they have so many options right now. You're kind of stuck saying, okay, I'm one of this massive crowd. How do I make someone buy my product?
Yeah. I don't know, man. I was reflecting on spaces and I think, even though there are so many skincare, hair care, beauty brands, there still are so many spaces that are, like large opportunities. Like, for example, this will be very funny, but yesterday when I was driving back home from work, I saw this auto that had this ad of like this medication for piles. Right? If you do the research, I swear on my life.
I was watching an ad for piles yesterday. I forget where, but I was watching an ad.
It is like 1 out of like, I think it's an absurdly high number. Like I think I think it's 1 out of every like, I don't want to give a bullshit number. So guys, just Google search it. But for example, the penetration of things like piles or even like gut health and digestive issues in India is fairly, significant. Imagine looking at the success of something like Yakult, right? Who is taking that, like who is taking all the things that Yakult bred into, consumption and productizing it in unique and different ways and, giving it to consumers. So like I am generally very big on like gut health. So that's one. Diabetes, I think is another massive space. Fertility
there's a company
is another.
called PiloKit, by the way. I've just Googled this. There is actually a company called PiloKit. They have a pilospray.com. They have, so someone's actually figured it out. It's there.
Yeah, but this is what I mean, right? Like it's about taking up these spaces that may seem like haha, hee hee, hoo hoo, to an average person. But the truth is, these are like large opportunities where you can actually use a lot of like content to even build brands up, right? Similar to what like Man Matters has been able to do in the men's, healthcare, kind of like ecosystem. So I would really go after these, like very mass-ish categories. Like I'd go after fertility, I'd go after gut care, I'd go after diabetes, I'd go after piles. I'd even go after spaces like kids nutrition. Think about it, there's literally only Pediasure and like Horlicks has some like warped positioning. But I'd go after spaces like this, which are actually massive opportunities. Jump in.
I was talking to one of the co-founders of Yoga Bar sometime back, and she was telling me one of the areas of focus for them is actually going to be kids nutrition.
Yeah.
The women's health were the two categories, and they actually have an entire kids segment they've gone up. So they've literally gone after your oats and chocos, but without maida and stuff like that. So
yeah,
I think it's already happening. People are seeing that as options, but I think the worry is this a category in a larger brand, or can this just be the brand? Is the question. Because how deep is it?
During Basecamp, which was the accelerator that LBV ran, we actually, one of the companies that signed up was in this, a kids healthcare, like this competitor to Pediasure. The market for that, if I'm not mistaken, I think it was like pretty impressive number. Yeah, the malt-based beverages in India is 11,000 crores. Right. So, and Complan used to be like the big sort of, company in that space. But I mean, each of these is like significantly large, and you never know, you may launch with like one thing and then use that one thing to get into like 2-3 other, ancillary sort of categories. There genuinely is a lot to sort of play around with. And even on this article on think testing, right, they gave a couple of really interesting examples. So for instance, an example that they gave in this article was, Hims, which is what Man Matters is modeled off of. Hims is a very like Western East Coast brand. What is the Bible Belt / like middle rural America positioning of Hims, right? Because that actually is another brand. That's not Hims. That like the positioning, the marketing, everything will have to be
just the way it is,
slightly different. Exactly. Another really interesting example that they gave was, when you're launching D2C brands, you need to think distribution first, right, and channel first. And there's this really cool article that I found there's this really cool brand that I found while I was going through this article. It's called Elliott's, and Elliott's offers a flower delivery service through Amazon. So imagine someone building Ferns and Petals, but instead of having to, spend all the money that Ferns and Petals has spent in, creating their offline stores and, obviously building up their website.
Also getting Anil Kapoor and Janhvi Kapoor in their ad.
Oh, I miss this. This. But you get the gist, right? So I think there's a lot of really unique ways of like thinking of newer ways of launching companies. But in India, especially, I think, one will have to think of your larger, more like meta opportunities than just a bunch of niches.
Yeah, I agree. And I feel what could also be interesting is to look at segments beyond. I think either you go super like general, like you said, or you go super niche.
Yeah.
I feel that if you're looking at the core consumer as in that 25 million, was it, which you spoke about?
Yeah.
Saying, okay, if you go even deeper into that, saying, what are that 10 million consumers? What are they going to buy? And just focus on them. I don't have to go that wide. Let's focus on the people who are actually spending the most amount of money. What do they really not have? It might mean going ultra premium, but it might also mean in some ways looking at a very specific use case, and you never know how much that might actually get you.
Yeah, hundo. Last story
of today. Let's go to the movies. I don't know why I sounded.
I am never going to the movies.
Why are you never going to the movies? What do you mean? One second, before we get into the story, why do you never go to the movies? Do you never go to a theater?
I literally haven't been to a theater in like 4 or 5 years. I can't even remember the last movie I saw in a theater. I'm just like very OCD. Like I am like very like yuck. Like, what if someone farted on this chair before I sat on it? Or like, what if the person before me had telu hair? Like I'm just like, yeah, movies are, and also I'm like very claustrophobic. So just the feeling of like being stuck in a theater with like, so many people and like like can't do it. I can't even do like PVR, like Gold Class or any of those other slightly more bougie places. Can't do it.
So there was this interesting article recently on, if I remember right, the Times of India, which talks about like how small towns are really going to be the space where, if you look at where Multiplex are looking at growth, it's tier 2 and tier 3 cities. They're going to bring the prices of tickets down. Is really the point here, is that you get 50 to 150 rupees as the ticket, which is when you compare to how much you end up paying today to buy a ticket in a city multiplex or even like larger multiplexes, is a fraction. Because I think that only way they can kind of battle what streaming has done to movies, even if you look at larger movies releasing lately, while your big, large scale, largely movies from the south that have been doing really well, like a KGF and an RRR, etc. Most of the Bollywood releases haven't done well. Most of them have kind of crashed and burned and not really gotten enough people on seats in theaters. So maybe I think it's an interesting throwback to what cinema was. It was cheaper entertainment for the base level consumer to kind of go for a family outing, and that at some point became unaffordable as multiplexes suddenly became more and more premium and more pricey and stuff like that. But I feel it's smart to look at tier 2 and tier 3 first, because I think the urban audiences now have fully gotten into the streaming space of things. And I think that's the only way that this market can kind of survive.
Yeah, I think, good article that you found, and also, a totally relevant point on, shifting sort of like pricing dynamics and parameters. And I think I had a question for you here, which is, fundamentally, if the shift for theatrical releases is becoming, if the consumption of, theatrical releases is now happening in smaller, screens and smaller theaters, in what way do you think the cost structure of making these movies will change? Because, then can you afford to pay insanely heavy, fees to, stars? Do you see the type of stars changing? And is this, like a theater's time to really shine and also create maybe like a newer crop of talent? Because if you've seen what's been happening in Netflix, Amazon, or even Disney plus Hotstar, right?
Disney plus, yeah.
All these guys are actually cutting their budgets and slicing their budgets down to nothing. Like I was listening to Pivot in the morning, and Netflix, who paid $700 million to buy Roald Dahl's, catalog, and they were supposed to make their own like version of Matilda. They've put that project on hold. They've, cancelled the show that they were going to do in partnership with Meghan Markle. So it seems like a lot of like, like the big ticket spends that these OTT platforms were doing, those is kind of like gone kaput. So how do you see the cost structures changing overall?
So the point is that if you look at streaming versus theaters, I think the point was that at most times movies would make money based on the percentage of revenue they kept with themselves. Like for instance, if you look at India, look at someone like a YRF, right? The reason why Yash Raj Films has been so massive is because they take a large chunk of the percentage, because the game is distribution and exhibition. When you go look at theaters, it's not as much about, how much you're spending on the movie and the marketing, because your ticket prices, how much of that is something you're keeping. Either you're taking the call, one second, I'm selling it to exhibitors and distributors.
Yeah.
I'm taking away the risk from me. And then I'm okay with this money. Or you're saying, I want to put that risk on the table and say, no, I will keep this amount of revenue and exhibitors will only keep that percentage. So it's always been that game. Streaming fundamentally changed that by saying that, no, this is what we're paying you for this. And, and that's it. We own this now. For larger scale movies, it doesn't make sense. I mean, if you look at a large scale movie, that's why I give examples of like a RRR in India, what a Brahmastra will be when it comes out this year. I mean, movie's taking like a decade to make almost.
Brahmastra is that Alia and Ranveer movie.
Alia and Ranveer one. It's been going on, I think, for 7-8 years he's been making that movie. So in that sense, so when you kind of build this whole thing out, how will that make sense? It'll only be a mixture of making money from theaters and money from, from streaming and obviously other stuff over there. I feel like if the ticket prices go down, then you're taking away the amount of money you can actually get from one source a lot. And streaming doesn't have as much money anymore because they're also tightening the strings here. So overall, what will go down is how much you end up paying the actors. Because today, one of the biggest cost factors is actually how much you pay the actors and how much percentage the actors actually take, because some actors even take territories. So they will say that this territory's revenue is mine. So like hypothetically, hypothetically, Salman might say, I'm taking this one territory because my core audience is there. Or an Akshay Kumar might say that whatever we make in Canada, 50% of that money is mine. So pay me less, give me that territory. That's how it always worked. But in streaming, how it's different. You can't take a territory in streaming. You are just taking money up front. So at some point, I think actors might do a lot more brand work and make a little less from the movies they have.
Actors, the engineers of all things movie business.
Yes. Valuations of actors are going down. Valuations.
Yes. A valuation of actors and, hopefully their comp as well. No, but interesting story, man, Varun. I learned something new today. Wow.
I know a lot about this side of the world. I've always been a film and this industry junkie. That's what I wanted to do in life, but never ended up doing it. Maybe I will one day become a producer of B-grade movies.
Sir, आप OnlyFans join कर सकते हो. There's a massive opening for you over there. That's the closest you're getting into the movie. You and Bird.
Me and Bird.
Oh my God. Geez.
So
I have so many things I want to say, but I'm just not going to say because I'm trying to work on my personality.
So before we go any further, we will take this part of the conversation offline and we'll take a break and be right back with recommendations.
Don't you think that if everyone around you is getting smart, you better be smarter? Hey there, I'm the traveling professor Siddharth Deshmukh, and I'm back with season 2 of my podcast to make you smarter. Smarter with Sid. What's this season's focus about? Well, it's about 10-minute nuggets that will make you stand out at work. It's time to go from smart to smarter. Tune in every Tuesday and Thursday and become smarter with Sid.
Welcome back to Think Fast, where this week we have listened to that one Twitter consumer who told us do longer episodes. We have gone longer than we normally do. I forget who that was, but you know who you are.
Yes, thank you so much for tuning in. No, I don't know who he is, but he's very sweet. Let me pull out his name while you share your recommendation.
So in recommendations, I've gotten back onto this analog or rather old school watch bandwagon. I blame this amazing platform called Hodinkee for it. I was introduced to Hodinkee a while back. Great business model. We should actually talk about analog watches on our episode. It's just a great model to talk about and how Hodinkee actually become this massive brand and revenue driver for the non-smartwatch market. So I've been down this rabbit hole and I went searching and I found an old Timex, which is a Pac-Man edition. It's an old Timex watch, electronic one, which has the Pac-Man characters roaming around it. It's an old electronic watch. I'm like, my recommendation is go find something retro and fun. Don't just buy the newest thing.
Yes, Queen, you do that. And while you're doing that, so the listeners, Apratim Mukherjee, we love you. Thank you for
this episode is dedicated to you, Apratim.
Yes, Queen. Varun brought his bird out specially for you. Oh God, Varun, there it is again. And that week. So my recommendation is actually this newsletter that I'm obsessed with, and they went quiet for a bit, but now they're back. It's called Lean Luxe, LEANLUXE, and it actually is my go-to sort of newsletter that has curated recommendations of literally the best of the web vis-a-vis consumer brands. And I found the Think Testing article on Lean Luxe. I found this other really cool article. So Varun, to the point that you were just talking about, maybe we discuss this next week. There's this article that came out on A16Z, and the article's called The Future of Search is Boutique. And I literally wanted to tweet this out saying, ha 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 ha, LBB was there first, but whatever, keeping backpatting aside. But this actually alludes to what you just spoke about with respect to Hodinkee, this particular article, and we'll get into that next week. But for brevity's sake,
Hodinkee for shop,
yeah, exactly. Hodinkee for shop, and then there's Wirecutter, and we'll and maybe we can talk about more examples next week. But I love Lean Luxe. I think everyone should subscribe to it. They have an excellent curation of articles from everywhere. So check out Lean Luxe, guys.
Amazing, and that's it for this episode from me, Suchita, and Bird. Hi, Bird. Was this episode good for you?
Yes, it was.
Oh my God, guys, no birds were damaged or touched inappropriately during the recording of this episode.
And suddenly we have Big Bird here. I have Big Bird also and Small Bird.
Oh my God.
Jeez
Louise. Okay, guys, before Varun starts finding more birds from God knows where, let's call it an episode. Bye.
Let's call it an episode. Bye, guys. Toodles. See you next week.
There's a quick survey to fill out on ivmpodcast.com/survey. It lets us know a little bit more about who's listening to us. And you know what? We're going to do a few prizes. So, we'll do a random drawing of maybe 10 people and we'll send you all some swag. Remember, that's ivmpodcast.com/survey where you can fill out the survey.
पेश खिदमत है आपकी शान में हमारे अंजुमन से. Hi, I am Sadaf.
And I'm Arshit. खाने का इतिहास, economics, policy, psychology, सब है मेन्यू पे.
Only on the Nankali podcast every Wednesday, सिर्फ IVM podcast ऐप या वेबसाइट पर या फिर जहां से भी आप अपने पॉडकास्ट सुनते हो.